Hey everybody, this is RC Peck, and this is my PeakGold training webinar. Um, Thank you all for being here. Oh, I had a bit of a rough start with this. I love being on time, and I was not on time today. I was wrestling with GoToWebinar. There were a lot of things going wrong with their service, and unfortunately, sometimes you have to rely on other services to get your opinion, point of view, your own service out there. And this is one of those cases. So thanks for being here. I am calling this training PeakGold, and I will talk a little bit about why I'm calling it that in a minute. A couple logistics. This is live, and you should have a GoToWebinar control panel. And on that control panel, there is a section on there that's called questions. On there, ask questions that come up. I will not necessarily get to them through the training. I really want to get this information to you. But at the end, I'm going to have a section for questions. So if you do have questions, just go to the control panel under the questions section, and I will get to those. Okay, so let's get going. So what is our agenda? So first, I want to talk about where we are today, where we are, and I mean like what is going on with gold, why not gold, what is going on, but where we are today, both with gold and the economy. I also want to talk about why gold and not something else, like why not junk bonds, why not startup companies, but why specifically gold. And I think you'll find that my point of view is very different, or at least I've been told by people that it's very different. And sometimes you're not going to like that. So I'll just say this, there's going to be things I say in this training that your belief system may rail against. Certainly outside of this conversation, people probably would have issues with a lot of things that I'm talking about in here. So if you're noticing yourself having issues with what I said, kind of ask yourself, is he attacking something I believe to be true? And why do I hold on to that so strongly? Is it based on evidence? Is it just based on my point of view? And I think what a lot of people will do is they'll notice that a lot of what they're defending is their point of view. I'm going to talk about why gold stocks don't matter as much as this one thing more than anything else. And I'm going to talk about how to get access to my research, our research. And then, like I said before, we're going to have some Q&A on here. Okay, so first, I am a certified financial planner and a registered investment advisor. I have to give an SEC disclaimer. It'll be really quick. So look, the opinions expressed in this training is for general information purposes only and not intended to provide specific advice or recommendations for any individual or any specific security. It's only intended to provide education about the financial industry. To determine which investments may be appropriate for you, consult your financial advisor prior to investing. Any past performance discussed during this program is not guaranteed of future results. Any indices referenced for comparison are unmanaged and cannot be invested in directly. As always, please remember investing involves risk and possible loss of principal and capital. Please seek direct advice from a licensed professional. Okay, thank you for that, guys. So as much as anything that this talk is going to be about, it's about doing things the right way. And it's actually not that easy often to do things the right way, especially if you're doing it yourself. And I'll talk a little bit about that in not right now, but further in the conversation. So on the screen here, you see two lines, a blue line and a red line. The blue line is the gold bugs index. That is the most followed index for precious metal mining stocks. It is actually the index to follow if you want to do anything to do with precious metal mining stocks. And that's the red line. And then the blue line is the LTEC Gold Best Stock Ever. So one of the things I do about my research is I give people different ways of investing in something, not just one way. Everyone has different personalities. Everyone has different approaches. To some people, investing in gold might be very scary, but they wouldn't mind having their money in, say, a stock, maybe one of the most safest gold stocks. And that's what the blue line is. And I'm going to give you access to that. I'm going to show you how to get access to that blue line near the end of the call. But the point is that this strategy I have called LTEC Gold, and I'm going to describe how this strategy works in this training. And I'm hoping that you can see and take the parts from the strategy that can help you most. But that is the blue line is the best gold stock that I've ever found, partially because it kind of does its own thing even when the actual sector falls. Now, a couple things you need to know. what is up against you more than anything else is information. Information is free and it is flowing and it is everywhere. Now, I have Mark Faber on here. He's a well-received economist. He does very well for himself and for his advisors. The point is to not say whether Mark is good or not, but we get hit with so much information from cable news to blogging to Twitter to newsletters. It is absolutely inundating us, both paid and free. And you got Eric Sprott on TV saying what you should and shouldn't do with gold. And you have someone like Barry Ritholtz who's doing the same thing. And these guys are coming on every day. And then you have David Rosenberg. I mean, these are really well-received people, well-intentioned. Here's the problem. Your brain is getting hit with information minutely. I know minutely is not actually a word, but it's getting hit hourly, daily, weekly, monthly, secondly. Like, you are being hit with information. And so this training, this webinar to you is not about more information. It's about eliminating information. And I spent time on the cable networks. I was on CNBC and Fox Business News and ABC and Bloomberg. And I actually stopped doing it. And here's the funny thing about this. It helped my business. People would see me on TV or on cable and say, oh, this guy must know what he's talking about because he's on cable. Hey, I'll go check out his company. And so when I did do the cable rounds, it actually boosted revenue for my company. But here's the reason why I left and I stopped. You don't know this unless you've been on TV, but basically about every 2 minutes is organized. So if there's a 1 hour show, everything is organized and designed down to every 2-minute block. And when you come on one of these shows, you're prepared. They say, look, you're going to need to have your sound bites. We're going to talk about this. You're going to be pro-utilities. You're going to be anti-utilities. You're going to be pro-Home Depot. You're going to be anti-Home Depot. And you got to give your point of view, and you have to do it in a sound block. And I realized that this wasn't actually helping people. This was part of the confusion, this industrial investment complex that I talk about. So I stopped going on. And it actually did hurt my revenue, but I don't think it was best for people. As far as who I am myself, some of you may know me, others may not. I am a certified financial planner. I am a registered investment advisor. I believe in doing best for the investor, for my client. That is not actually what other people believe. I am married. That is my wedding picture. And I have 2 amazing kids. Little Snowball is my daughter, Everly, and my son. That is an older picture. That picture's about... Gosh, that's probably about 4 years old now, but I just love the picture, those little beings. I am a family person. So look, where are we today? Where is the country? Where is the world? Let's talk about this because this is important. So first, I want you to write this down. I actually want you to write this down. Your strategies define your choices, not your assets. And I've been pounding the table on this for years, my entire career. I've been at this since 1998. This is, when I say I've been at this being educating people, showing them what really works. And what I learned very early on is you do not want to diversify into assets. You want to, if anything, diversify into strategies. And that's what we're going to be talking about here is what is the strategy based on where we are today. So I'm going to read something to you. And don't worry, there's not going to be many slides where there's lots of reading, but this is the only other one. The first was the SEC. So don't try to read ahead. Let me just read this to you. This is from the New York Times, or this was published in the New York Times. 2 years ago, gold bugs ran wild as the price of gold rose nearly 6 times. But since cresting 2 years ago, it has steadily declined almost by half, putting the gold bugs in flight. The most recent advisory from a leading Wall Street firm suggests that the price will continue to drift downward and may ultimately settle 40% below current levels. The rout says a lot about consumer confidence in worldwide recovery. The sharply reduced rates of inflation combined with resurgence of other more economically productive investments such as stocks, real estate, and bank savings have combined to eliminate gold's allure. Although the American economy has reduced its rapid rate of recovery, it is still on a firm expansionary course. The fear that dominated 2 years ago has largely vanished, replaced by a recovery that has turned the gold speculators' dreams into a nightmare. So the question is, when was this written, right? I mean, sounds like it was written yesterday, but guess what? This was published on August 29th, 1976, which happened to be 3 days after the 1976 low. just before gold started a 3-year 800% rally. Now, here's the point of me digging into articles from 40 years ago, 50 years ago. It feels the worst at the bottom, and it feels absolutely amazing at the top. And the point is, we can't look to our emotions, and yet we can't turn our emotions off. And yet most people who are listening to me right now, you've decided to, in part or full, do it yourself. And the do it yourself, the DIY, has a big tumbling block, and that is what I call your lesser self. This is your limbic system. These are your emotions that take over. You can be the most intelligent person, but you're not going to outrun your limbic system. And I thought this article was very interesting because, man, would this not scare people who wanted to get into gold in, say, August or September of 1976. Everything emotionally would have been pushing against them, which I believe is still pushing against them today after gold falling, depending on where you want to start the measurement, 3, 4, or 5 years. But I talked to you before about where we are today. This is a price chart of Japanese government bonds. This is the yield of a 10-year government bond from Japan. And the yield today in Japan is negative. It's actually negative 15 basis points. So you give your money to the government, the Japanese government, for 10 years, and they're going to give you back a little bit less of your money each year. This is happening today. And it's not just Japan. Here's Germany. Now, Germany's not as bad as Japan, but look at this. You give your money to the German government for 10 years, and every year, all they're going to do, I mean, at the end of 10 years, you'll get your money back, but what will the value of it be? But every year, the German government's just going to give you 14 basis points a year. 14 basis points. I mean, 1% is 100 basis points. They're going to give you 14. Now, what is this saying about the world we're in today and where we are? There's a lot of things where we're in trouble. And the government bonds are telling us things are in trouble. It's not just Bernie and Donnie having the trend that they're having. People are saying things are not working out. Now, this is a price chart of the yield of 5-year government bonds across the world. And on the right, you see Switzerland, or I'm going to tell you it's Switzerland, and they're going to take about 75 basis points, 0.75% of your money every year if you give them your money for 5 years. And then the red bars below the line get shorter, and then they start to get taller. But even if you give your money to the U.S. government, you'll get about 1% a year if you give them your money for 5 years. Well, everyone lives in a different part of the country, obviously. I live in Silicon Valley. And in Silicon Valley, we have about a 5% interest rate. Or I should say, sorry, a 5% inflation rate. So if I'm going to give my money to the government and make 1%, I'm going to lose in purchasing power 4% a year. And this is the point I want you to get. It's the difference between that. That's called financial repression. There's actually an economic term for it. And it basically means your money is dying, but you might not be able to visually see it because each year your $10,000 that you gave to the government, it won't go away. It's just going to buy you less and less. Now, when this happens, it means real interest rates are negative. And if you look at the gray section here back in 76, below the line, this blue line, that's what real interest rates, and real just means inflation adjusted. Real interest rates were negative for a lot of the 70s. And if you look here in the 2000s or the 21st century, they're negative a lot of the time. Not every single day, week, month, or even year. But we're in a situation where we have negative interest rates. And historically, when governments have run negative interest rates, one of the things that's been going on is things are going wrong. Things are not working properly in the government and in the economy. And that's why interest rates are negative, because the government says, hey, let's just drop interest rates enough. And then, just somehow companies are going to start borrowing money and building new factories and designing new products. But that's actually not what's happening today. When the U.S. government dropped interest rates, what companies did was they borrowed money to buy back their stock. They're not producing new products. They're buying up their competitors and buying up their float, which is how many shares are outstanding in the market. And these are the reasons why we're seeing gold start to bottom, if not bottomed at all. Now, look, I'm not suggesting you're going to get what my clients get or what people who buy my research gets. But Michael Tarnoff, and I get you might not know who Michael Tarnoff, but one of the things he said, he goes, what RC teaches is not taught anywhere at any price. And Michael, the reason I bring up Michael here is because he was tired of having to look at the market every day and every week and every month. Now, you may like doing that, but ask yourself, are you doing that because you want to and it's fun and it's actually producing great returns for you? Or are you doing it because somewhere you were taught or told that you have to be paying that much attention? And let me tell you, that is a bad thing if you're paying that much of attention. But one of the things Michael got from kind of coming into my world or being exposed to my research is he felt and he started noticing he didn't need to look at the markets every day or even every week or even every month. He was able to change how he worked. This actually changed his entire life, right? He only had to work 3 days a week. And he was able to miss every major crash in the markets over the last 5 years. And I'm going to talk to you about why this is, whether it's for gold or the stock market. I'm going to talk about that. But as far as where we are in gold, we're in a place where there is an incredible amount of instability in the world. And we have these cycles every once in a while. There's a lot of instability in the world in the mid-60s to the 70s. Now, I was born in that instability, and I did a lot of research about that. But anyone who remembers the 60s and the 70s, there was an incredible amount of instability, not just in the United States, but the whole world. I mean, China was absolutely imploding. And so we're in one of those situations where there's an incredible amount of instability. And again, I'm not pro or anti Donnie or Bernie, but one of the reasons why you have Bernie Sanders and Donald Trump trending like they are is because people are saying enough. They're saying enough, enough. Things are not working for the bottom 99% of people. And I can probably be pretty safe by saying the bottom 95% of people, it's not working. So why gold? Why should you be in gold and not something else? Yeah? So here's the first thing I need you to understand. Gold does not equal safety. Gold does not equal safety. It does not. The strategy, the last screen I had that said, write this down, it said strategies, not assets. Gold does not equal safety. This might sound weird to you because we're talking about gold in a training called PeakGold, but gold does not equal safety. Your strategy equals safety. And most people are going to say, look, gold is safety. It's durable, right? It's consistent. It's divisible, right? This is why people like gold. You'll hear a lot of people say like, well, why gold? Why gold? And people say, it's to preserve wealth. Yeah, you know what? But there's long periods of time where you shouldn't own gold. You don't need to own gold. You didn't need to own gold in the 80s or the 90s. In fact, if you did, it hurt your net worth. So I want you to understand that I'm not a gold bug. I'm a probability bug. I'm a how do we protect our money bug. Because I think that's what's most important for all of us. And yes, gold is durable. It is consistent. It is divisible. It is an exchange mechanism. There is zero liability if you possess it. You have it in your possession. You have your ounces of gold in your house. Okay? And it's priced in almost every single currency in the world, but it is priced in US dollars and euro and yen and yuan and any other paper currency, any other fiat currency. But why do you want to own gold? This is not why you want to own gold. And I get that what I'm saying to you right now goes up against probably everything other people say, why gold? But this is not why you want to own gold. You want to own gold because it's going higher. And I'm not trying to be sarcastic or flippant with you right now. I'm being really honest. You want to own things that are going higher. And gold has been going higher since 2000. There was a horrendous 45% correction in that move, right? But I'm going to talk about the cycle that we're in. But the reason why you want to own gold is because it protects your choices and it protects your security in the future. That's why you want to own gold. not because it's durable and consistent and divisible and exchangeable and not somebody else's liability. You want to own it because it's going higher, which means I don't think you should own it forever. I don't think you should have had gold in the 80s and the 90s, but I do think gold should be a part of someone's portfolio today. Now, this is a price chart of gold going back 100 years. And can you see that there's periods of time where gold goes higher and then it goes lower? Now, this is the 70s right here, and this is kind of present time. You can see the year 2000 down here. This is the 70s. It would have been nice if I would have put the 70s right here. But I want you to see that gold goes through a cycle. You don't always want to own gold, right? And then it goes higher. Now, this was 2000 to 2011, then it fell 45%. And now we're in one of these up moves. I believe we're down here where the red arrow and the green arrow. I'm going to show you better charts than just this. But this is 115 years of gold, and it's adjusted for inflation. So even though gold was fixed at $35 from 1933, right, to 1965, it was dying against inflation. And so I don't think you should always own gold. I believe it's a great way to protect your wealth and give you more security when we are in these green up arrows, which we are. But I don't want you being in the down red arrows saying, but I'm a gold bug, but the government's printing trillions of dollars. You're right, it is. But that might not be best. That might not be what's best for you to own. So why gold? Because it's going up right now. It's in its up cycle. It is cycling higher. And there is a relationship that gold has to the stock market. And it's probably a 10,000-year relationship. Gold's been around for about 5,000 when humans needed to store their protection, right? If they needed more fuel, more food, more protection, more shelter, they could protect themselves through gold. So this is really a relationship that goes back. It's kind of in the DNA of humans, because if you're here today listening to this webinar, it's because somebody in your past, some ancestor in your past, had some gold in some form and they survived. But there's this 150-year relationship between gold and the stock market. And there's periods of time where the stock market, beats the gold market. And there's these cycles, these periods of time where gold actually does better than stocks. And we're in one of those cycles now where gold does better than stocks. It doesn't mean stocks are going to do horrible, but it means gold will do better. So if you look at the screen, what you see here is about 100 years of data. And you have calendar years here, 1914 to 1930, and so on down here, ranges. The second column is the price of gold. Okay. And you have stocks right here. Stocks, and then just how many years these cycles ran. But just notice this 8 to 16-year period, stocks did well and gold didn't. Then you had gold do really well. It's actually gold and silver there. You couldn't own gold between 1930 and 1947, so I replaced it with the next most used precious metal, which was silver, and silver outran gold. And then the baton was handed over to the stock market, and the stock market did really well from 1947 to 1965. And then look, from 1965 to 1981, gold did so much better than the stock market. And then the baton got handed over to the stock market. And in the year 2000, the baton got handed over to gold. Between 2000 and 2016 today, gold net, even with its correction, is up, about 350%. Now, during the same time period, I made this number red. Okay, it's still positive, but the stock market's up about 100%. So you have this asset up 3 times, more than 3 times, of what the stock market is. But you can do even better, because I don't want you to have to suffer through those 40% losses. And that was just what gold fell. Silver fell 70%. Stocks, precious metal mining stocks, the large ones fell 75%, and the small ones fell 90%. And there's just no reason to suffer through those corrections. And that's why really pick of the month newsletters, even for gold and exploration, they can't help you as much as you want them to, because they're not going to tell you to ever get out, because you paid them to say, keep giving me stock picks. Keep telling me what to buy, even if the market falls 50%. And if you want to remember something, it's not about stock picks. It's about probability, the probability of knowing when to be in and when to be out. And if you look at the screen here, this is 100 years of the US stock market. And there's periods where the market goes up, and there's periods where the market goes down, and there's periods where the market goes up, and it goes down, and it goes up, and it goes down. Now, stick with me here. I know that that is up, and the arrow is sideways. If you were to do inflation-adjusted Dow Jones, you would see that this is actually lower. But stick with me for a second. I want to show you what happened in this 18-year cycle right here between 65 and 81. And just point out, this is the stock market, but I want to point something out. Here's the US stock market right here between 65 and 82. I said 81 before, it's 65 and 82. Look at this, look at the volatility. Couldn't get above, this is the Dow Jones, couldn't get above 1,000. Came back down, tried to break above it, couldn't, fell. Tried to break above it, got actually broke out, fell back down 50%. Catastrophic loss for a lot of people. In 1976, tried to break above, couldn't do it, fell. Sideways for years, tried to break above, fell again. Finally, in 82, at the very, very, very end of 82, beginning of 1983, it broke above. Well, if you were to look at this stock market and compare it to the US stock market, like the S&P 500, you would see a lot of similarities here. Now, there weren't trillions of dollars printed and interest rates dropped to zero. So eventually, all that money printing and manipulation did move the stock market higher out, but not based on fundamentals. The point is not the price. The point is how much instability is in the stock market today. Now, if you look at this during the exact same time period, this is gold. This is a price chart of gold. And it went from $35. It peaked at $850 and then settled down into the $600 range. Now, I believe we're here today, right? Because you can't tell because this correction looks so small with this great move up, but this was a 50% correction in gold. Now, we just got out of a 45% correction. This correction, it looks longer here, but this correction was just about 1 year. And our most recent correction was about 3 or 4 years. But this is where I think we are today. But it's not enough to know that this is where we are today because there may be other corrections, and this was the peak in gold. And from here, this is 1981, 82. It just kept falling for 2 decades. So you have to know more than just, I got to have my money in gold. You have to know the probability of whether it's actually best for your future. And that's what this training's about. That's what my strategies are about, is knowing what cycle we're in and knowing even if we are in a gold cycle, should you be in right now? Now, if I showed you the year 2000, I showed you this other section here, and yes, the Dow Jones went higher, but I want to show you this compared to gold. So if you look at the screen here, LTEC gold, and I'm going to talk about this in a minute, but LTEC gold is up 452%. During the exact same time period on this price chart, the S&P, which includes dividends, is up 90%. Now, one of the differences that LTEC gold, which is different from gold itself, and this blue line is actually the metal gold. This is not mining shares. This is actually the metal. But the reason why LTEC gold was up 452% is because it got out, LTEC gold got out at this red dot and got back in at this red dot. And so it missed a big part. It didn't get right back in at the bottom, but it missed a very big part. Well, first of all, it missed the whole movement between these two dots, but it didn't get out here at the top and get in here at the bottom. So this is not a timing strategy. This is a probability strategy. And the reason why parts of you might be interested in that is because it's the probability that your money is most interested in. And so LTEC gold went up 452%. And that's the difference of knowing what cycle we're in. Remember the two guys running with the baton getting handed, whether we're in one of those gold cycles or stock cycles. That's one part of it, knowing what cycle we're in. But the other part of it is, okay, great, we're in a gold cycle, but there's periods where you don't want to be in, you want to step aside. And that's why LTEC gold has done what it's done. Now, there's some scenarios that could replay themselves. The NASDAQ itself in the 90s for that decade went up 13x, right? So if gold did the same thing, If gold went up 13x, starting in 2000 when it was $253, we could get gold of $3,250. I'm pointing this out because investments especially, can move in directions much bigger and longer and greater than the human brain could ever comprehend. If we had the Dow Jones move from 82 to 2000, that was 18x. That means gold could go to $4,500. And if we had gold's move from 1971 to 1980, which was a 24x, we could see gold at 6,000. Whether we get gold at 3,000 or 4,500 or 6,000, the point is that it's very difficult for the human brain to calculate what gold can actually move at, what it can actually do. It's very difficult to understand that. And so even if you look at gold at 1,200 or 1,300, to comprehend that, man, this could go to 2,400 or 3,600 or 4,800 or something higher. This is what I do know, that this country, the United States, let's call the country called Europe, the country called China, there are some major systemic problems. Now, China and the U.S., they have an incredible amount of gold. Now, China's lying about how much gold they have, and I believe they're going to come out in the next couple of years and say, we actually have 8,000 or 9,000 tons. China's the largest manufacturer of gold in the world. I know you don't manufacture it, you mine it. They produce more gold than any other country in the world, and they're also importing more gold than any other country in the world. So you have the largest mining country in the world, and you have the largest importer of the world. They want to float their currency. They want to float their bond market. And they're going to come out, I believe, in the next couple of years. And they're going to partially or fully back their currency with gold. And that's going to stabilize their currency how they want it to. The U.S. can do the exact same thing. They're going to say, hey, we have these $10 trillion, these $20 trillion in liabilities. And hey, we're going to back it. We have gold. And you know, if gold's $10,000 an ounce, we no longer have any liabilities. And if you want to hand in your debt to us, what we owe you, great, hand it in, we'll hand you an ounce of gold at $10,000. And so there's going to be this great equaling that happens. And that great equaling happens it happened in the 70s and it happened in the 30s. And it's happening again today. Those moments where the price of gold has to be changed to equal out the liabilities of the major developed countries. So we had in the 30s, we had in the 70s, and we're having it today. And those moments in history are called peak gold. Now, I'm calling it peak gold because there will not be enough gold to go around. And when there's not enough of something to go around, the price has to discover, or people have to discover what's the right price. And they're going to discover that it's going to go much higher. And so these are some gold scenarios that absolutely can happen. Well, for sure, one already did, and it's happening today. Now, I want to let you listen to Richard Green for a reason. He worked with me before, and I don't know what you guys know about Silicon Valley, but basically Silicon Valley is filled with really smart, hard-working, skeptical people. And that's important to know because having lived in Silicon Valley for 18 years, my clients are all over the world. I have people who read my research in 24 countries. But having started in Silicon Valley, I had to learn to deal with people who had that skepticism. And the type of people who buy my services and come into my world or say, RC, will you come into my world and help me? They're people who are skeptical. They're people who have been hurt. They've been hurt by the big box advisor or the boutique advisor or the independent advisor, but they've been hurt. But they have that skepticalness. They're not cynical, but they are skeptics, but they're still open to saying, look, there's got to be a better way. And I think Richard does a good job of it.
I just now remember this. The night before the workshop started, way back then I did them on Saturdays. I spread them out over between each other. You called me at like 8 o'clock at night basically saying, I'm not going to do it. You're like, RC, I don't think I should do this. The timing's not right. It was something like that. And I basically said, Richard, just show up. And if you don't like the first day, you will have lost one day of your life. I don't think that will happen. But just, I might even say, just show up for the morning, and if we get to lunch and you think it's a complete mistake, I will hand you your money back. Do you remember that?
You know what? Now you mention it, it vaguely rings a bell. But I did that. I can remember not wanting to
do it.
Spend the time. Well, just because it was another thing. So I was jaded. So just to give you a little background on Richard Green, I've been involved in the tech industry for about 25 years. And I've been on the executive management team of 8 startups, of which we sold 6. So, I live in a great house. I earn a great income. I have a fabulous family. I have great goals for my life, as well as affirmations for life, wife, family, and my community. I'm blessed with great fitness and health. And I struggle with the most with figuring out how to become independently wealthy. And my experience had always been with sort of big name brokerage houses who would happily put me in stocks and shares and bonds and asset allocate. When the market went down, my money went down. And they'd say to me, well, it didn't go down as much as everybody else. And I just kind of didn't understand that. So I realized their motivation was to take a percentage of me, but it wasn't aligned with my success. So when I met RC, I realized I was generating a great income, but I didn't have the skills or the emotional maturity to manage wealth. So what RC did for me, which is just what he can do for everybody else, and it's just been a life changer, is figure out what I had been doing with money, which was losing it. Take control of the budget, which we didn't have, got aligned with my family, which we weren't, and put us on a strategy which would take the emotion out of the process and just allowed us to execute. It was less stress, it was less worry, it was less time spent looking at the day-to-day. So my recommendation is, if you are as serious about being as successful with wealth management as you are in the rest of your life, you need to spend some time with RC.
Now, the one thing I wanted you to get from that more than anything else is, and first of all, Richard's very open to how, this is not just a Richard thing, this is how actually people really operate. That I've met a lot of people who are intelligent, who earn well, but it's this area of actually growing that money and being able to understand how emotions can really hurt. And one of the things that when I was talking to Richard that really stood out for me is how our emotions are actually the thing that is our downfall. And whatever strategy you follow, one of the worst strategies is a pick of the month strategy where you're always having to pick a new stock or a new ticker symbol and more ticker symbols and more ticker symbols. And then I got to get more ticker symbols because it's always a new story. It's always a new, it's always a new company. And here's the problem with that. The conscious brain can only handle 7 things at once, plus or minus 2. So that's between 5 and 9 things. And, it has to worry about how it's feeling, where it's going, what it's doing, what's going on, not about breathing. But if you put 10 ticker symbols or an extra ticker symbol each day or each week or each month in front of you, your conscious brain's going to shut down. And one of the things that I liked what Richard said, and that's true about my company, is, look, if you want to just be able to eliminate the noise and plug into something, not mindlessly, but plug into it and not be on your own, that's one of the reasons why clients have kind of, they've been attracted to this idea and the way that I've done my research with Fearless Wealth, that they can just plug in, they can eliminate the noise. So the question is, how did Richard do it? He aligned his money to the market. I'm going to talk about that. He invested in a strategy and not a stock. You've heard me talk about this again. What is your strategy? You want to get a strategy. And then you want to keep it straightforward. And so many people don't keep it straightforward because they're just so overwhelmed with their pick of the week or pick of the month or pick of the day. Keep it straightforward. Okay. Why gold stocks don't matter as much as this. Now, you've learned, or you've been hearing me, that actually it's not gold that's most important, but knowing when to be in gold and when not to be in gold. All right, so what matters more than gold stocks? And here's the thing, and you want to write this down. It's probability and not diversification. It's probability and not diversification. So what do I mean by that? Well, look, you've been taught, and you've absolutely been inculcated to believe that you need to be diversified. And so you go get some and we're going to stick with gold right here. You get some producers and some developers and some exploration stocks, and you get some silver and maybe some mid-tier producers, and you get gold and some royalty stocks, and you get some currencies. And you say, okay, I'm diversified. All right, I've got all these different things. I've been taught from the very beginning, before I even knew what people were talking about, that you got to be diversified. Okay, but what if this boat hits something? What if it hits an iceberg? What if it sinks? What if you don't want to be on the boat at all? Then what? That's the problem. It's not diversification. It's probability. You want to know the probability of winning or being in the market. Now look at the screen here. This is a price chart of gold from 2000 to the beginning of 2016. And there's a red section. That's when LTEC gold was out of gold. And there's a circle, a red circle. And I want to talk about that red circle. Because when gold was falling, it did not matter how well diversified you were in gold and silver and platinum and mid-tier and large tier and exploration and mega and mid and international and domestic gold mining stocks. They all fell. What's most important is knowing the probability of whether your money is going to fall or not. And so that little red circle here, this chart is gold. So on this screen, it's gold. Now it's a blue line, but the same circle represents where it was on the previous screen. What you have here is gold and silver and large cap and small cap mining. Look at the falls. Now gold fell 44%, the blue line. The red line below it fell 68%. The green line was large cap mining stocks, which fell 80%. And then small cap on this screen, small cap mining, precious metal mining stocks fell 88%. Knowing when to be out and when to be in is what's most important. And you can tell it's not in, out, in, out, in, out, in, out, in, out. It's like, hey, the probability of gold helping us has changed. And that's what you want to know. You want to know the probability of whether it's helped you or not. That's what you want to know most, not what ticker symbol. That's not that important. Because look, if the tide is rising and you got large cap or mid cap or small cap or mid-tier or exploration, you're going to do well. That's what's most important. And that's what this strategy LTEC Gold is about. It's knowing when to be in and when to be out. And look, you can have all the investment newsletters you want on gold, but they're not going to come out one month and say, okay, sell everything, we're going to step aside. No, they're going to earmark, or they're going to benchmark their returns to the benchmark, which is the XAU index. I'm not saying they should or shouldn't. I'm simply saying that's what they're going to benchmark it to. So if the XAU, the gold bug index, falls 80%, and their mining shares, precious metal mining shares, only fall 70, they'll say, hey, I did my job. But like Richard said to you before, something's wrong with that. That doesn't feel so good. And so if you look at the screen here, the red line is gold. It's actually gold, and it fell on the screen here. It's that same circle that I've been showing you from the previous two. It fell, in this case, with the fall all the way down here into December 2015 and then moving up, it fell. But LTEC Gold is this blue line up here. That's that blue line. It's up a little under 2%. I know you're not in this game to make 2% over 3.5 years. But you know what? I think you'd rather make 2% than lose 23% and go through these gut-wrenching parts of your life that you didn't need to. And most of the people that get my research, they're over the age of 50. And they've said to me, they're 50s, in their 50s or their 60s or their 70s, right? They're not in their 30s or 40s that can have these roller coasters. They don't want these roller coaster rides anymore. They rode the roller coaster. They don't want that anymore. And a lot of them are saying they have financial PTSD, post-traumatic stress disorder, not around shooting wars, but around financial wars. They're having this traumatic stress disorder after the fall of their accounts, and it's affecting them. They are getting panic attacks. I'm being very earnest and honest about this. They're being hurt emotionally. So having your money not fall 23% feels pretty good. And instead having it go up 2%. That's what LTEC Gold has done for people who have followed that strategy. And this is what LTEC Gold has done. Gold's up 3%. We went into what I call green light mode with gold, and it was up 3%, and LTEC Gold was up 13%. Again, they're both in precious metals, but it's in the details. It's the nuances. It's those shifts. Those are the differences. And it's those differences that make the difference for people. This is Alan and Liz, 20 years of searching. Finding RC happened just in time. I now observe the markets. My returns increased 100%. Stock market drops no longer concern me. Now, stock market drops still happen. They're not immune to it. They're still human. But as I've been telling you, they have this probability point of view. So for a lot of those major falls, like in 2008 with stocks, we're not talking about stocks right now. We're talking about gold. They didn't experience that. The results are a different way of looking at investing. So here's another one of my major principles, and I'd like you to write this down. Align your money to the market and not your beliefs. This is a huge difference. Like I said to you before, I'm not a gold bug. I'm not anti-gold bugs. What I want to be is a probability bug, and that means aligning my money and you aligning your money to what's actually happening in the market, not what you believe should be happening. So what's happened to a lot of people is they say, but I believe gold should go higher. But I believe gold should be higher because of all the dysfunction that's going on in the government. I get it. I really do. I get it. But it's not going higher, right? People saying Donald Trump should not get the nomination. He should not get it. Yeah, but he's trending higher. But he is connecting with people. Whether you believe in him or not, it doesn't matter. He's trending higher. Bernie Sanders shouldn't be doing that. He's hurting Hillary Clinton. But he's trending higher. But he has a point of view that people are connecting to. So what you want to do is align your money to the market, not your beliefs. It's very expensive to align your money to your beliefs. But this is what people do. And the LTEC strategy that keeps people, it eliminates that, well, I'm going to align them with my beliefs. No, you want to align your money to the markets. And I think what most people are searching for, whether it's with the LTEC Gold strategy or any strategy, I think they're searching for this idea that they never run out of money, that they can be a difference maker to their spouse or to their family or their community or their cause, that they can finally break out and protect their money from the silliness, from the uncertainty of the government. And the government is doing very dangerous things. It's not the first time. This happens in a cycle. About every 35 to 40 years, the government does really stupid things. They did it in the 60s and the 70s. They did it in the 30s. They're doing it again today. They did it in the 20s too, by the way. But this is what I think people are searching for, is this security and this feeling of free, like I will be okay. I will not outlive my money. And a few of them do that, right? It's about having choices. You don't like beaches? That's fine. Go to the mountains. It's about having the choice to know that I will not outlive my money. And it's about knowing that you do not have to do risky things. One of the things that really concerns me that is going on today is I see people in their 50s and their 60s and their 70s really, really doing dangerous, risky things. And they get into this do-it-yourself mode. And I get why they get into the do-it-yourself, because they go through this process of going to the big box advisor. Didn't work. Then they went to the independent advisor. Didn't work. Then they said, you know what, I'll just do it myself. And they got wrangled into pick of the month newsletters, which are all about complexity, doing something each month. And I'm going to tell you, the human brain is not designed to buy all these different ticker symbols and then manage them. It's not. And it's just not me that believe this. John Templeton, incredible investor over his life, lived into his late 80s, was worth $20+ billion when he died. He recognizes very early on in his life that you've got to separate yourself from the actual purchasing or have a strategy that is very specific. But you have people who have brought on all this complication to their life, and they're watching all these things, not because they want to, because they think they have to. Now, if you want to do this, that's fine. Set aside $5,000 or $10,000. Make it a hobby. But put the rest of your money, the hundreds of thousands or the millions of dollars that you have, put it in a system that aligns your money to the market that's based on strategy and probability and weight of evidence. And what happens is people start with these complicated approaches and they just they fall asleep. Their portfolio just falls asleep. They forget about it. I'm not making fun of these people. I'm telling you what actually happens. I'm not indicting them. I'm not judging them. I'm observing this over my last 2 decades of working with people. They start off with all the great intentions of pick of the month newsletters and workshops and all these different ticker symbols. And eventually, literally their brain gets overwhelmed. It has what's called decision fatigue. And they pay a biological and a financial price. And they literally just they don't recognize it, but kind of unconsciously they fall asleep. And their money is scared, but it just falls asleep and they don't do well. Because when you do the pick of the month newsletter, you got to buy it and you got to get out and you got to do it exactly how they say. And guess what? Even if you do that, in this case, a gold mining newsletter, so you're very clear that I'm not selling newsletters. And if you even get a gold newsletter, you're going to get hurt if the market falls. If the market, in fact, did not bottom in December of 2015 and goes to new lows, you're going to get hurt. I don't want you to get hurt. Now, the people who have used the LTEC Gold strategy, they know they're not going to run out of money. They know they're going to have enough money. They know they are back in control of their future. They're not going to be a burden on their spouse or their kids or their grandkids or their community. And a lot of people are telling me this is what they want. They don't say this at dinner parties and cocktail parties. They say this on one-on-one conversations. I can't run out of money. I need to get control back over my future. And that's one of the things that my clients get with this LTEC Gold strategy. Because look, is your advisor, your newsletter making your future safer? Well, probably not. And that's why you're listening to this training. And look, I built the LTEC Gold strategy, which LTEC, LTEC, stands for long-term economic cycles. I built that so people could have a different point of view, one that's not coming out of the industrial investment complex. And like it or hate it, newsletters are part of that complex. They rail against the big box advisors. I get it. They rail against Wall Street, but they're just as dangerous because they don't understand how your lesser self, your limbic system, your R complex, your brainstem, it is not designed to buy and sell all these different ticker symbols. And you can have the best and the biggest prefrontal lobes and the highest IQ, and that prefrontal lobes, your prefrontal lobes are not going to outsmart the oldest parts of your brain. So I built this strategy so people could actually implement it, to tell people when to be in gold. Or when, okay, now we're in gold. Okay, but should we actually be in? We're in the gold cycle, but we're in green light mode, having these 2-tier steps. Like you saw before. Should we be in gold? Okay, yes, we should be earmarking money for gold. But now do we actually be in it? Yes or no? And it's those 2 steps that you want to know. So you don't end up with the 1980s or the 1990s where you own this stuff that's depreciating and you've aligned with your beliefs like, yep, always got to have 5% of my money in gold. No, you don't, because you didn't need gold in the 80s and the 90s. And even today, you want to earmark money for gold, but there's going to be periods of time that gold's going to fall and you want to be out of it. So 2013, 2014, and 2015, the buy and hold crowd, they lost 37% of their money. And LTEC Gold, we still lost. You lost 4% of your money. That's a 32.5% difference. That's a third of your money. Some people would think that's a lot. I know I've talked to people and they said, man, that difference really made a difference for me to not lose that extra third. And you've seen this price chart before. Gold will fall. And even if gold hits the U.S. government says, okay, gold's going to stay between $9,000 and $10,000, and if it falls below $9,000, we're going to bid the price up so it gets above $9,000. And if it gets above $10,000, we're going to start selling a lot of gold so it stays below $10,000. So even if gold gets reset to, say, $9,500, I'm not saying it is, but hear me out. You still have this thing called inflation. Gold was set at $35, between $33 and $65. But gold's purchasing power fell precipitously. So there's going to be a period of time where you don't want to own gold again in the future. And no gold newsletter is ever going to tell you that. You want to know the probability. Parts of you, the parts that are most concerned about your money being protected, wants to know, okay, I get it, RC. There's going to be a point in time, and it's that probability, that cycle when the runner hands the baton back to the stock runner. That's what you're going to want to know. Because look, there are 4 major asset classes on this planet. You have stocks, you've got bonds, you got physical assets, commodities and real estate, and you've got currencies. Now, I put gold in physical. Okay, I kind of think of currencies as fiat currencies. But these are your 4 major asset classes. And this strategy that I've been talking about, this LTEC, long-term economic cycles, it decides whether you should be in physical or in bonds or in stocks. It tells you. And right now it's just jumping between, okay, we're in physical, we've been in physical. It tells you the best way to own physical. It's an entire system. It's a global kind of organic whole system. And that's what you want. You want to know when to be in and when to be out. And as you saw from my charts, this is not day trading, week trading, monthly trading, quarterly trading, or yearly trading. These are cycles that run the course. So LTEC Gold, when I built at LTEC Gold, I actually wrote up a checklist so you could follow it yourself. I gave all the support research for it. I gave it, right? It's not a secret. I gave you, this is the research. This is my research. So if people read it and they said, oh my God, this is horribly done research, then they know not to follow it. But I give the research. And you'll notice with a lot of services, they don't tell you how they're doing it. And they don't actually give you a checklist. This is exactly how we do it. I give it away. A lot of times people just say to me, just tell me what to buy, RC. Just tell me what to buy. I did that for this LTEC Gold. I give monthly support. One of the things I hear mostly from people is they say, RC, I don't want to be on my own. Tell me when the alerts are. Tell me when the triggers are. Tell me when the signals are. I want to be able to ask you a question any month. Give me the forecast. Let me know what's coming forward. Dark clouds, blue skies. And so I give a monthly support call, and you can ask any question you want. And I give all my training videos. This is what you get with LTEC Gold. Now, that's the value of it. It has sold for this. I'm not suggesting you buy it for this. But what I want to do is I want to make it accessible to as many people as possible. So if you go to PeakGold, and you don't need to go there right now, but if you go to peakgold.org, and I'll keep this open for 24 hours, I will give you everything for $997 if you buy it in the next 24 hours. And you just go to PeakGold, and I'm going to show you what it looks like when you get there. But for $997, you'll get the checklist, you'll get the research, you'll get the video, you'll get the live monthly Q&A, you'll get the complete training videos. You'll know exactly what to do. I'll show you what metals to buy. I'll show you what mining shares to buy. I'll show you what leverage positions to buy, or should you even buy leverage positions. I'll show you what coins to buy, and I'll tell you when to sell. And so much more, and I'll tell you why. Now, here's the thing. You don't need to do everything that's there. Just because there's a lot there doesn't mean you need to use everything. I simply want to point out something to you, and I think I'm alone in this idea. I don't want to upsell you any more research. So you can get up off the floor because you probably fell off your chair. I don't want to upsell you any more research. I don't. I want to give you all of my research. I want to give you monthly calls. I want to tell you what's working now. I want to give you a 30-day forecast. I want to give you speed investing. This is where you bring your own ticker symbols to the conversation. And you say, RC, check out this ticker symbol. Tell me what you think of it. And I deconstruct it right there on the screen on the call. I give live Q&A. I want to give you the support. And I get that you might not be able to afford hiring someone like me one-on-one, though some of you will want to do that. But I want to give you these monthly calls. I want to give you this access. I want to give you the review of the strategy so you can know where we are in the strategy. That's what LTEC Gold gives you. You never have to be alone. But there's also no upsells for other research. So if I come up with a new research piece, I'm just going to give it to you. And I believe I'm alone and singular in this idea and how I run my company. because when I was on the side of the table that you're on, I wanted to say, like, just can I just buy once? I just want to buy something once and not be freaking upsold every minute of every day to 17 other services. I just want, just tell me what to do. So no upselling on any more research. If I come up with a new research product, I just give it to you. I will give you immediate access to what to buy now. I'll give you immediate access to the entire LTEC strategy. I will tell you, I have the support videos. I show you exactly how to do everything. And you're in a monthly conversation with me, and I give you these updates and changes for the strategy. So if anything happens with the strategy, I update that, and you can have that for life. Okay, and there's a 90% try everything money back guarantee. So let me tell you what this means. First of all, it should be 0% money back, but I get it. You got to try this out. So here's the thing. You get access to everything immediately. So I'm not going to dole it out 1 month at a time over 12 months. You get access to all of the videos for LTEC Gold. I tell you exactly what to buy right now. And even though this service should come with a no refund policy, I'm not doing that. I'm giving you a 90% back. I tell you when to be in, when to be out, what to own, when to own, what to avoid. This is very little activity, guys. This is not what to buy each day or each week or each month. It's not about doing more. It's about what is the minimum I can do to get the maximum return. It's not about what's the most I can do. And if you don't like the service, I'll return 90% of your money in the first 30 days. You'll have access to everything. And you can just go to peakgold.org, which will then take you to an order form. It's what's called a redirect. It'll take you right to an order form. And I'll show you in a second what that order form looks like and what happens after that order form. But here's the thing, guys. Details matter. Nuances matter. I do not have this image on the screen to offend anyone. What's the difference between these two people? The hat, right? One guy was a very dangerous, horrible monster, and one guy was an amazing entertainer to millions of people. And the difference? One teeny weeny detail, a hat. The difference is in the details. It's not in the global. It's in, when to be out. What's the probability of winning? What's the probability of losing? That's what matters most, is the detail. When you look at this screen, this is the price chart of gold. This told you when to be in, when to be out. And this has made a difference for a lot of people in their life. You should not just have 5% of your money in gold. What? Where'd that idea come from? Someone selling gold? What I want you to do is to align your money to what is going on in the market. That's what's going to help your future the most. And this is a price chart of gold. Those two red sections is when we were out of gold. It's knowing when to be in and when to be out, that probability, and not the asset class. That's what's most important. Back here between 2000 and 2011, look, gold did really well, up 423%. LTEC Gold crushed it. There's nothing magical about this, guys. This is based not on magic, but it's based on math and history and weight of evidence. Yeah? When I told you before, and you've seen this price chart before, LTEC Gold, the best gold stock ever, which I give you access to all of this. It's not about upselling you more research. It's about finally showing you what really works and having a company that you wish would treat you the way you wanted to be treated, not being upsold every day. So if you buy within the next 24 hours, you get access to everything. Here you see the LTEC Gold up almost 2%, gold itself down 23%. You've seen this price chart before. It's the worst 3-year period for gold ever. And LTEC Gold did fine. There will be one of these points in our future. I don't know when, but you're going to want to know the probability of when to be in and when to be out. And you've seen this too. When LTEC Gold went into green light mode, it moved up faster than gold itself. So this strategy works both when the actual underlying asset is moving higher, and it also works really well when it's saying, hey, step aside right now. Now, I want to give you a bonus, and I want to be clear about everything that I want you to have. So number one, you have access to the strategy called LTEC Gold. You have access to all the monthly alerts, signals, get on a Q&A with me, listen to your other members' Q&As, you get that. What I also want to give you is another strategy called LTEC Bond. Bonds is one of the major asset classes on the planet. You shouldn't always be in bonds. I don't care what your age is. Bonds did not do as well as stocks in the 80s and the 90s. It didn't. Be in the asset class that treats your money best, not what year you were born. Now, I get it. What year you're born, that may have some influence, right? So if you're 70 years old or 60 years old, you might say, well, let me just have stuff that's less volatile. I get that, but it should not be your driving force. Because look, if you're 60 years old and you know that we just entered into a cycle where stocks are going to be the best performing asset class for 18 years, they're going to beat everything. You're not going to want as many bonds. You're not. And that's going to be okay because stocks are going to do really well. But if you're 30 years old, and probably there's no one on this training that's 30, because 30-year-olds don't think about this stuff, and the best asset class to be in is bonds and gold, it shouldn't matter what your age is. You should expose some of your money to bonds and gold. So I want you to have, if you sign up in the next 24 hours, I'm going to take this down after 24 hours, I'll give you access to LTEC Bond. And this is the price chart of LTEC Bond from 2000 to 2016, up 162%. During the exact same time period, the stock market itself is up 100%. So LTEC Bond beat the stock market by 60 percentage points. Not bad, guys. Here it is right here, S&P 500, LTEC Bond. I want you to have this strategy, the full access to this strategy. These are the bonuses: immediate access to what to buy, instant access to market probability strategy. Now, this is a completely new strategy. I don't want to overwhelm you. If like, RC, you're giving me everything. I don't need everything. That's totally fine. You don't need to look at any of this right now. LTEC Gold will treat you very well. This conversation is about PeakGold. I'm simply letting you know how I run my business. I don't do upsells. You're not getting upsells to buy other research from me. Once you get in at this level, that's it. You get everything. And market probability is this amazing strategy I built 20 years ago. I give you everything, the training videos, you get the conversations, you get updates and changes for life with the strategy itself. Again, just try everything. 90% money back guarantee in those 30 days. Now, I don't want to be too alphabet soup, but this is market probability, MPX. In the 2008 crash, market probability, I have two types, was up 0.4%, while the S&P fell 25% in the 2008 crash. This one strategy, market probability, this is just about the stock market, nothing else. It just lives in that one asset class called stocks. It doesn't care about bonds or physical assets or currencies. It's just stock yes, stock no. This was the 2000 crash. Market probability went up 11.4%. During the exact same time period, the S&P 500 went down 32%. This is a strategy just for stocks. It's super straightforward. No upsell here. I want you to have access to this strategy right now if you buy in the next 24 hours. This is one of the main differences. Here's the recent bull market that we're in. Market probability 2, MPX2, is up 231%, while the S&P is up 107%. Like LTEC Gold, it does really well in uptrends too. So here's the overview. These are my strategies that I built. LTEC Gold, LTEC Bond, MPX1, MPX2, and one called Obvious Trend, which we don't have time to get to. Here is the point I want you to get. You will not be upsold these. You buy one, you get all. You're here for LTEC Gold. I completely understand that. You don't need to ever read anything about LTEC Bond, MPX1, MPX2, Obvious Trend. I'm simply saying to you, if you buy in the next 24 hours, if you buy today, I'm giving you access to all of my strategies. And if I come up with a new one down here called Amazing Selling Options Strategy, you just get it. You get it. You're not upsold to it. And you also get the monthly support. RC, what do I buy now? Office hours. I want to connect with RC directly, ask him questions. RC, give me the 30-day forecast. I want to bring your ticker symbol to you, RC, and you deconstruct it for me. I call that speed investing. And most importantly, the alerts. Are we in? Are we at? What are the signals? tell me, email me, let me know. This is the overview. Right now, it's $997. I give you access to all of that, all of these strategies, and this monthly support. You get that. And again, if I come up with another strategy that I think is important, you get that. I get that this is very different business model than you're probably used to. You're probably used to the get in and get up sold. That's not this. This is my strategy. This is how I run my company. Now, when you go to PeakGold, you're going to see this order form right here. Okay, you just fill in your name and your information down below, which I can't go down below because I just got this screen, but you put in your information and you hit enter. And when you hit enter, you're going to go to, it's going to take a second, but it's going to take you to this page. And this is me right here. This is the office I'm in right now. And I'm going to offer you a strategy review. Some people call it a second opinion. Some people think of it as can you just implement this for me? So in my almost 20 years of working with people, what I've noticed most that people need but don't ask for is, one, they want a second opinion. They want someone looking at their investments and say, can you just look at this? Can you look at this and just tell me what your point of view is? Where am I hurting myself? Where's that biggest gap? That's that second opinion. Another reason why someone would say, give me some of RC's time, is they say, you know what? I know myself. I'm not going to implement this strategy. I want the strategy. I understand it. Maybe I just want RC to implement it for me in my accounts. And I can do that. And it can be a strategy review. Now, my time is not free, so there is a payment to it. Now, I said to you before, there is no research upsell. The only thing that people do pay more in my world is to get access to me. The most important commodity on this planet is time, and I protect my time very well. And I want you to protect your time very well. So I don't want people getting my time who just want to talk to me. I want people saying, you know what, I need to get time with RC. I need to get a second opinion. I need to talk with him. I'm worried. I'm not 15 years younger now. I've run out of income runway. I need to talk to someone. I need to connect to someone. And that's what this is about. That's what that video is about. And I want you to listen to it even if you now know what it's about. All right. And if you do say yes to that and say, yes, I do want to get some of RC's time, and that there is a fee to that, then you go to a questionnaire that I ask you some information, and then we get on the phone together, and then we make things happen. I want to thank you guys. Now, before I get to Q&A, I want to point out a couple things. If you want access to all of the strategies and never be upsold for any strategies, at least in my world, then it's $997 today. And then I will take that down after 24 hours. And you can just go to peakgold.org. Now, before we get to the Q&A, and I have a lot of questions that have come in, I just want to point out a couple of those main principles where I wrote, write this down. So one, you want to align your money to the market and not your beliefs. Number two, you want to diversify into strategies and not assets. Three, it's the probability of whether you should be in something and not the asset itself. Those are the key takeaways. And those are very different. Those are very different from what you've heard, and you're noticing that already. Okay, so questions that have come in, a lot of questions have come in. Should I buy gold or gold stocks? Should I buy gold or gold stocks? Which one should I buy? That comes from Larry J. So Larry, you have all those answers once you get the LTEC gold. I tell you exactly why you'd want to buy stocks over metal. I tell you exactly when you'd want to buy metal over stocks. I tell you exactly when you want to buy silver over gold, small cap over large cap. I give you access to all that, and you have that as soon as you log in. Next question is from Mark A. I like that Mark with a C. Does it work in IRAs? Absolutely. This strategy absolutely works in IRAs. The LTEC Gold strategy absolutely works in IRAs. This comes from Larry L. Does it work in 401ks? So the LTEC Gold strategy does not. Not because it can't, but because 401ks are very restrictive instruments, and 98% of them do not have a gold choice. Now, some of them have something called brokerage arms, and if you do, then it does work, but 98% of 401ks will not. I would say to you, the other strategy I have called market probability, that MPX, that was designed to work in very restrictive types of accounts like 401ks, 403bs, 457s, superannuations, RRSPs. So it does work in that. So not LTEC Gold, but market probability does work in 401ks. Okay, next question is from Ricky C. RC, with this LTEC Gold, are you talking about gold stocks or metal or coins or options? What are you talking about? And the answer is, yeah. What I'm telling you most is when the probability of gold going higher is best for you. So if you want to buy coins or options or metal or shares, you first need to know whether it's in a high probability mode or low probability mode. Everything else sits on top of that, everything. This is from Jim H. I'm retired and my money is geared towards income. How can this help? Yeah, it's a good question. So, and I work with a lot of people over the age of 50 and 60 and even 70, and this is one of their key questions. The most important thing, and there's two. So the two most important things for people whose portfolios have been geared towards income. A, it's geared towards income because mostly what they're saying is I can't handle the volatility of the market. Because let's just say there was a magic formula that could handle and eliminate a lot of the noise. And if that was true, that account would grow much faster than, say, just having money in a kind of a dividend type account, right? So an account that has a lot of muni bonds or government bonds. Even if someone whose majority of their account was geared towards income, even if they took a small percentage of their account, 10%, and they allocated it to LTEC Gold, now they'd lose the income from that 10%. So let's say they lose 10% of their income. So for example, if they had an account, I'm just making this up, if they had an account that was $500,000 in size, and the income that came from that account was, let's just say, 4% a year, right? So 4% a year on that $500,000 is $20,000 a year. If you took 10% of that $20,000, now it's $18,000, but you took 10% of that $50,000 and you put that to LTEC Gold. What LTEC Gold people would have found is that $50,000 over the last 15 years is now $200,000. It's actually more than $200,000. And so, yes, that $50,000 was not producing income. But guess what? You don't need income when the $50,000 is now 450% higher and it's $225,000. You can just pull principal out. So you can get to where you want through income or through growing your money. And LTEC Gold is about capital appreciation. Okay, this next one's from Rich K. What if metals pull back and then break down to new lows? What if, in fact, this is not the bottom? Yeah, nobody knows. Gold bottomed in December of 2015 and have been moving up. And we don't know if it's going to go back down. And one of the things that LTEC Gold does is says, look, I don't care whether gold is going up or down, but look, if it's going to go down, let's step aside. So Rich, if it does move back down, we're going to get a signal that tells us to step aside, not forever, right? So if Harry Dent has his way, and Harry Dent uses a lot of fear mongering, and we get our $700 gold and our 2,000 point Dow Jones, well, we're not going to ride it all the way down because we want to align our money with the market, not our belief system. So you may take some small losses, but I'd rather have you take small losses than large losses. Okay, this one's from Steve T. Look, do you use moving averages? Is that one of the things you use on gold? And the answer is it is. One of the things I use to help us with our signal, and our signal has 4 parts to it. One of the parts is using moving averages on the actual price of gold and coming up with moving averages that do not have a lot of false signals. So when you use moving averages, you want to use a pairing of moving averages, like a slower one and a faster one. And then once those cross, the typical thing you say is like if the 50-day crosses below the 200-day, call that red light mode. But the problem is about 80% of those crosses lower are false signals, meaning it doesn't actually mean the world is ending and gold's going to fall. So having moving average is one of the signals that I use to make sure that we're not whipsawed in and out. So thanks for that question, Steve. Okay, last question. A lot of these questions that are coming in are very similar to what, I mean, there's slight variations, but these, I was looking at the questions as I was going through the training, and these are, there's really, well, there's probably one or two more, but one of them is, how does it work internationally? So a lot of my clients are people who get my research, they live overseas, and it works the same. Now, your base currency is different. So for example, I have a lot of clients in Australia, and because their base currency is not the US dollar, it's the Australian dollar, they were in gold much longer than people who had their base currency be the US dollar. And in fact, gold has been doing well for them because the Australian dollar has been getting crushed against gold. So I make the adjustment. I say to people, look, if you're paid in euros, then it's one small shift, and it's an easy shift to make, and I show people how to do that. So if you, basically the question, and thank you for the question, Eric, or it's Erica, it's not really, do I live in a foreign country? Really the question is, if I'm paid in a foreign currency, that's really what you want to know. How does this work? And the answer is it works really well because we just change one thing, and then you know exactly whether we're in green light or red light mode with gold itself. Thank you everybody for being in my world. I really appreciate it. We had some technical issues today. I apologize. It happens sometimes, and it happened today. Big takeaways though, there is no research upsell ever. The only time you'd ever pay more is if you want to get one-on-one time with me, to work with me individually, or to say, RC, please, could you just manage my money? I get how you do it. Please manage my money. But as far as all of my research, we have a no upsell policy. Once you get in, you get all research for the year that you are current. And I just love that policy, and it's a policy I wish other companies had because I hate being upsold on new research and new newsletters. But if you do want to get time with me, and time is the most precious, there is an investment to that. But if you buy within the next 24 hours, if you buy today for that $997, you get access to all of my research, the LTEC Gold, the LTEC Bond, the Market Probability 1, the Market Probability 2, and Obvious Trend. You get research to all of that, and you get those monthly updates and connections with me. Guys, thanks so much for being in my world. Thanks for being part of this training, and I look forward to seeing you at the next training, the next monthly gathering, which has been the second Tuesday of every month for over a decade. Thank you so much, and I will speak to you soon.